Will China's property crisis send shockwaves to your doorstep?
What is going on in China, and will it affect the US economy and stock market?
Well, let's find out.
The fall of a Chinese property giant. Have you ever heard of a company so large its collapse could rock an entire nation's economy? What if that company missed a critical payment? Country Garden is not just any company. As one of the world's preeminent home builders, its influence spans most of China's urban landscape. Its recent failure to make a $22.5 million coupon payment doesn't just raise eyebrows, it sets alarm bells ringing. Markets around the world are now closely observing as a month-long deadline looms. If Country Garden doesn't address this debt by early September, the consequences will spread across the property sector and the wider Chinese economy. The halt in bond trading already signals significant challenges ahead. Investors, policymakers, and homeowners are bracing for a tumultuous ride.
Do property developers pose systemic risk? What happens when one of the largest Chinese property developers begins to crumble? Will this send shockwaves through the economy, leaving home dreams shattered? Country Garden stands tall among property developers, especially in China's emerging urban centres. Their construction pace earlier this year was nothing short of extraordinary, even outpacing Evergrande, another property giant that sent shockwaves through the market with its 2021 default. The implications of Country Garden's potential default are severe. An estimated 145,000 families are expecting homes by the end of the year. Their dreams hang in the balance, their investments at risk. It's a bitter reminder that when giants stumble, the aftershocks can reach the most unsuspecting individuals.
The shadow of Evergrande. Remember when we thought some giants were too big to fall? Why are the echoes of Evergrande haunting Country Garden? The story of Evergrande's default still lingers in many minds. Once thought invincible, its fall was a reality check. Many believed Beijing would intervene, ensuring such a significant player couldn't falter. As Country Garden grapples with its challenges, uncomfortable comparisons arise. The company, once on investors' safe list, is now under scrutiny. This isn't merely about enormous debts. It's an eroding trust that even the mightiest can falter, reminding us that no entity is truly immune from market dynamics.
Suppliers at breaking point. When a giant stops paying, what happens to the smaller players? Can they survive the financial drought? The property development supply chain is vast and interconnected. Suppliers of materials, construction outfits, and countless small businesses play pivotal roles. Their operations often hinge on timely payments from developers. Unfortunately, delays have become highly concerning. As payments dwindle, the pressure on these businesses rises. The data from China's latest crisis is stark. Country Garden's transfers to such partners plunged significantly over the last year. Without intervention, many of these firms may face insurmountable challenges. Such an outcome will reshape China's property development industry and cause higher unemployment. Local economies and much-needed housing projects are at risk.
State developers, the next domino to fall. Have state-backed firms been the safe havens in the latest Chinese economic storm? Is the storm's eye about to turn towards them? Since 2021, private property developers have faced increasing challenges in accessing international bond markets. State-backed enterprises on the other side seemed more resilient. This dynamic has changed, for the worse. Now even state-backed entities are beginning to show vulnerability. Firms like Sino-Ocean, once considered bastions of stability, now show signs of stress. Should state developers falter, the narrative around safe investments will change drastically, further unsettling an already volatile market.
Chinese banking sector in trouble. Could a single property developer's fall risk the stability of big banks? Or is the threat more intricate? Many analysts reassure that China's banking giants can endure even significant property defaults. But there's more to this story. A declining property market will likely pressure banks into changing their lending strategies, leading them to pump more funds into the already troubled property sector. This will diminish returns and, crucially, misallocate resources when the broader Chinese economy faces wider challenges. The intertwining of property developers and banks is a delicate dance, and missteps will lead to broader economic strains.
Social unrest, the silent tsunami. What's more daunting than financial turmoil? How about thousands taking to the streets, demanding justice? Beyond the boardrooms and trading floors, the real story unfolds in homes across China. Price adjustments by property developers like Country Garden will trigger industry-wide ramifications. As prices tumble, potential buyers will likely hold off, waiting for even lower rates. And for those who already invested, feelings of regret and demand for price matching grow. In the past, such dynamics have sparked public protests. The sheer number of homeowners involved with Country Garden, many of whom have made significant upfront payments, raises the threat of widespread public discontent.
Beijing's dilemma, to intervene or not. When faced with a sinking ship, do you throw a lifeline or let nature take its course? What's Beijing's next move? Country Garden's current challenges aren't merely about liquidity. Their reluctance to address their missed payments signals deeper strategy considerations, possibly hinting at broad debt restructuring. This scenario places Beijing in a dilemma. Direct intervention could stabilize the immediate situation but sets a precedent, potentially making the government responsible for more future bailouts. On the other hand, standing by could unleash market turmoil, risking economic contagion and even social unrest. It's a delicate balance, one with far-reaching implications for the Chinese economy and the global market.
Spillover effects to the US. How does China's property crisis affect the US economy and stock market? China's economy doesn't operate in a vacuum. As the world's second-largest economy, its ripples are felt globally. For the US, these challenges in China's property sector have clear impacts. American investors hold a notable share of Chinese assets and debts, and a dip in confidence will lead to a sell-off, affecting US portfolios. Further, disruptions in China's real estate market will impact its consumers. A conservative Chinese consumer means reduced purchases of US goods, from luxury items to technology. Additionally, the US stock market, sensitive to global events, will experience higher volatility due to significant economic shifts in China. This is not just China's story. It's a global narrative where the health of one economy can influence the prosperity of others.
If you enjoyed this video and want to see more content like this, make sure to hit that subscribe button to never miss an update. It really helps support the channel, and we'd love to have you as a part of our growing community. Thank you for watching, and happy investing.